All right, folks, welcome to Investing for Beginners podcast. Today, we are going to do a bird's eye view of Alphabet, or as we all know it, Google. So Andrew recently did a write-up in Value Spotlight, which is his newsletter service about Google. And we thought this would be a good opportunity to talk about this amazing company. So I guess with that, let's start diving into Google. So what do they do?
Yeah, Alphabet actually owns two big websites we all know, Google and YouTube. So those are two very, very big revenue sources for the company. And, as I'm doing my write-up, I structure them very similarly, where I always start at why do I care about this company? Why am I excited? And I think that probably comes pretty easy for anybody analyzing any company. But I like having checklist items in there. And I think having checklist items throughout a research process for a company can be very helpful. In this case, part of my checklist is to look at a company's average revenue growth over the last 10 years. And I think starting there is a great place to start, because I have gotten really excited about companies, and then you look at the revenue growth and you're like, oh, like this might be a harder investment than it looks on the surface. So in the case of Alphabet, 19% average revenue growth over the last 10 years. I mean, that's a huge number on its own. And then for its size, and then the fact we all know what it is, 19%, that's crazy. Okay. And then 19% for something that's not an obscure, like brand new tech, crypto, AI, none of that. It's a company we're all familiar with, and it's at 19%. So something like that, if you're feeling down about a company, sometimes the numbers can help you feel up, because it feels like a lot of Wall Street is very down on the company right now.
Right. Yeah, for sure. So just to kind of put that in perspective and maybe drive that revenue growth idea number and what kind of big person numbers we're talking about here. So the last 12 trillion months, according to FinChat, $328.2 billion in revenues in the last 12 months. And to put that in perspective, so like scale wise, Visa, one of the largest companies in the world, easily one of the best brands out there, well-known brands, 36 billion.
Right.
So 10 times bigger than a company like Visa, which everybody knows. And so you start putting numbers in there in that scale like that, that's when it starts to go, oh, yeah, wow, that's impressive. Like you said, at that size, it's not like it's scaling from a $1 million or $1 billion company to, a $5 billion company. Those are impressive numbers. All right. So what about Alphabet or Google attracted you other than the 19% revenue growth?
Well, it might not be a hard thing to guess, but the price was very attractive to me. You look at a chart of the company's historical PE, or price earnings ratio, it was on the lower end of that. And so that's going to come with its own can of worms. And I think I tried to spend a good amount of the write-up discussing why people are down negative about the company. And there are certainly things that are valid, but understanding that there's a value opportunity, that's one part of the equation. Then the second part is figuring out what brings the value opportunity. And so it's a great business, but there's also uncertainty up ahead. And that's why there's a value opportunity.
Yeah, exactly. So maybe before we dive into some of the negative, I guess, narrative around the company, what are some of the things that you see as positives?
Yeah. To me, it's one of the best businesses in the world today. And one of the things I said specifically was Google is a continuously improving magical service that we all take for granted. And so it's just amazing. Yes, they generate a lot of revenue, but they also provide so much value to people's lives. And I think that part, we're talking about business, we're talking about stocks, obviously, but they have really improved a lot of our lives for the better through what Google has become. And it's helped a lot of people. I mean, what did I do? I changed out my speakers the other day. Granted, I ripped out the door handle. That was my fault because I wasn't paying attention to the YouTube video. But 10 years ago, that wouldn't have been possible for me because I'm not a car guy. But whether you're talking about YouTube, you're talking about Google, it has empowered us with information that we haven't had in generations before us. And so in a good free market, companies that provide value and a lot of value to people also gain monetary value. And so for me, the magic of Google search is I just think it's taken for granted because we've had it for a while. And every time we want to use it, it works perfectly fast. And so we just take it for granted. We think, of course, this just should exist. It's always existed. Why wouldn't it exist? So it's like one of those things that's just right under our nose.
Yeah. To further, I guess, hammer that point home, I'm older, I'm 57, and I remember the days of having to use encyclopedias to learn about ants. And now you can go on Google and you can spend the rest of your life, if you want, researching and reading all the different resources that are available about ants. And it's mind-boggling. And it's also mind-boggling to think that, you and I both have younger daughters, and they have not ever existed in a world that Google didn't exist in. So they don't know anything before a Google, where a lot of us do. And so I think that makes it even more of a miracle than I think we probably give it credit for. I mean, it has become a verb, right? We Google everything to Google something. So I think that illustrates the adoptiveness as well as just the adoption and how much we're trying to use it. And to further your YouTube point, I used it to help me put in extra memory in one of my computers a generation ago. And I would have never been able to do that without the YouTube video. It just would not have happened.
Yeah.
So it's amazing. So what about the value? Like you talked about it offers, a really good value. And that's one of the things that you found attractive about it. What about, I guess, the fundamentals of the company give you insight into whether there is a potential value here versus maybe not?
That's a great question. I would say there's not always a perfect answer for every company, but going back to the checklist, a few of the things I'll look at for every company, and I think it's helpful in helping you avoid some red flags or value traps, I'll say. So looking at that revenue growth and looking not just at the headline number, 19% over 10 years, that sounds really nice, but looking at whether you do it visually or with hard numbers in Excel, are there any huge jumps along the way? And that might point you to something else. So as an example, if a business was to double in size, but it did it by, destroying their balance sheet and borrowing a ton of money to double in size, well, by looking at a chart of the revenues, you would see that huge gap up, and then that would tell you to go further. So in the case of Alphabet, you don't see that. Another thing I like to look at is operating margin and operating margin trends over time. So operating margin is a profit margin. It's telling you how is the core business, how profitable has it been? And one of the things you want to look out against would be a declining operating margin. So this one just comes to mind because I wrote an email about it recently, but Disney has been one of the examples, perfect example of a bunch of revenue growth, and yet earnings per share that does not follow because the margins have really cratered and have not come back. And so revenue growth is important, but the next step would be to look at operating margin. And for Alphabet, it's been pretty steady. There's been some ups and downs, but it's been pretty steady. So that to me is also a good signal. We're not in some super high peak. We're not at the Mount Everest of the company, and then maybe it'll come back down. We're also not seeing a decline year after year after year. And so having those kind of basic checklists, and I just use FinChat for that. And I look at the charts, and then those go in the write-ups. So it's an easy visual check that, okay, the fundamentals are probably in a good place. Doesn't tell the whole picture, but it gets us moving past potential red flags and moving us down the path of analysis.
Yeah, that's a great insight. And to me, when you look at those margins, it's more to me like a steady eddy. Like it's just, it keeps doing what it does well and efficiently. To me, those are signs of a well-run business, that they are growing revenues and they have their costs under control. which allows them to have more profitability, which gives them more free cash flow, which allows them to continue to reinvest and things like that. So that's all fantastic stuff. And just a little sideline, some of the resources that we've added to Value Spotlight now help you with some of those insights, like learning how to measure revenue growth or looking at the different metrics and how those can help you. And that's part of what we're doing with Value Spotlight is it's an educational tool as well. So along with the write-up that Andrew provides and all the great insights, we have these little addendums, if you will, that can help you with particular parts of the write-up that you may not be familiar with and just give you another learning tool. So it's awesome stuff. So how do you value a company like Google?
Yeah, I would say 80% of the company is the same way. So I'm looking at the cash flow statement. I'm looking at how much free cash flow have they brought in recently and how much do I expect that to grow? And then what is my opportunity cost? What's my hurdle rate? How much do I expect to earn from this stock? And so for Alphabet, it's all pretty good. I mean, I don't think I projected super crazy projections. I thought somewhere between 9 to 12%, and then anything else is a cherry on top,
Gravy.
They could do half as well as they did in the last 10 years. And my valuation would still show that this was a great investment for me. So that's what I did for Alphabet. And I try to do that for every business. And the more of a, you say this all the time on the show, but the more of a range that you can put on your estimates, that gives you a margin of safety. So you're not trying to get an exact number for a future that's so uncertain. Yeah. So, you definitely, I mean, for me, that range of growth rates changes depending on how strong I believe the business is. For Alphabet, they are on this very much stronger range. And so that's why I'm comfortable at something that like 10 or 12% a year, which would be a great result for any business.
Yeah. Yeah, it would. I feel like that's a fairly conservative number too, based especially on the near term with the AI and the cloud and some of those other things that they have going on. So not every company is without its baggage, and there could be potential downsides, which I think is something that you do better than most people, is that you spend a lot of time thinking about the downside or the potential risks. And I think that builds in a margin of safety, but it also builds in I can sleep well at night because I know I've thought deeply about what could go wrong with this. And kind of that Charlie Munger idea of inverting everything. So recently the Department of Justice decided to point their finger at Google. What are some of the things that you kind of discovered reading through that document and how they impact Google at the moment or could impact?
Yep. It's definitely a tricky situation. I'm not a lawyer. I'm no law expert, but I did read the documents and I have decent expertise in looking at financial statements and all of that. So it's clear to me, I won't rehash the whole documents, but it's clear to me that the way that Google was the default search option, for example, if you bought a new iPhone, you downloaded Google Chrome or even on Safari, the search bar was always going to be Google. They're the default. It's clear to me that that's not going to be the case in the near future, further future, whatever the case may be. And so as an investor, we have to ask ourselves, are people still going to use Google if they're not the default? That's where the big argument starts and maybe even ends on whether you're bullish on Google or not. Is if you buy a new iPhone and you have to choose between Google and Bing, or they default to Bing and you don't start with Google, is that going to hurt Google? And are they not going to be as profitable as they were before? And so for the write-up, I tried to laser focus on that part. Are people on Google because it's the default option, or is Google really a better service than other alternatives? And so that's what I try to look at and answer that question, because that makes the other questions a lot easier to answer.
Mm-hmm. So can you tell us what your thoughts are? How do you feel about that question?
Again, going back to this idea that we take the service for granted. There's some really eye-opening simple data points that like really stood out to me. So I'll just share them. One was a competitive analysis from 2020 that Google had done, and it was, now it's public information, but basically they tried to estimate if Apple wanted to create its own search engine to compete directly against Google, what would it take? And the estimate was it would take Apple $10 billion to start the search engine and $4 billion per year to maintain the technical infrastructure.
Wow.
So again, we really, this like hyper fast response time that we get when we go on Google, and by the way, really relevant results, like you're going to get a good experience most of the time because they have so many of these experiences that they're continuing to perform for us. And that doesn't just happen from a guy who's like in his mom's basement coding up a piece of HTML or something. It takes a lot of data points. It takes a lot of searching and organizing and sifting the internet and filtering out all the BS and getting us information that we need and getting it quickly, which where a lot of the technical infrastructure also comes in. So all of that is actually really expensive to continue to maintain. And that's what helps make Google a better alternative to other things, because they have those years of experience and the technical infrastructure and the continuous reinvestment to keep Google relevant for you.
Mm-hmm. A question I have or kind of wonder about is, I know Microsoft has spent a few bucks trying to build out Bing and make it competitive. Why do you think that has never taken? Or at least to this point has not taken?
It's a hard question. Just anecdotally from my experience, it hasn't been like, I just feel like I'm searching longer on Bing than I am on Google. And then so it goes back to this advantage they have with the data, and they know what resources to give to people so that they're happy with going to Google. I mean, if you're going to Google for information, the best outcome is you get the information, you leave. And so the more they can do that for people, the more people trust Google for lots of other queries and things like that. So I don't know why exactly Bing hasn't been able to do it, but they have tried to invest over $100 billion up to now to compete against Google. And I don't remember how long ago this was, but I remember they used to run the TV ads where they were doing these blind, you remember that?
Mm-hmm, I do.
You know, they spent a lot of money trying to get the Bing brand off the ground, but for whatever reason, the public has resisted it.
Mm-hmm.
And I wonder if it's because of, well, maybe one's just better than the other.
Yeah. I have felt for a long time now that the user experience is just way better on Google than it is on Bing. And this is not a knock against Microsoft in any way, shape, or form. I own the company. I love them. But I just feel like in this particular circumstance, Google just does it better. And I guess I'm curious, what do you think? Maybe once that they are no longer the default search, do you think customer behavior is going to change that much? I know for one, anecdotally for me, if I buy a phone and it doesn't have Chrome on there, I'm still going to download it and use it. Do you think that's really going to impact them that much?
I personally don't. That's why I've bought the stock and why I recommended it for people. It's just been like they've had a culture of innovation and they've continually improved on it. So just to give a couple more examples of, again, these are things that we've all taken for granted. So they started voice search in 2008. They did Google Maps was 2005, but Google Images was 2001. And then you had search by image in 2011, featured snippets in 2014, Google Lens in 2017, and then obviously all this AI stuff more recently. But this is just the tip of the iceberg with all the different innovations they've done to the search product. So they've been continuing to improve it, even though they could have just sat on their laurels this whole time, probably, and they would probably have still made a lot of money. But it's based on how much they spend and all the engineers they hire and all of these things, it's pretty clear that they care about that user experience and trying to keep it cutting edge so that whether you're searching on voice or you're searching an image or you're searching in the old fashioned way with a computer keyboard, they want to be able to help you get what you're trying to look for and then live your life. And so maybe it's possible that other competitors are also doing that same thing, but for one reason or another, Google has maintained that network, and that's one of their moats, is this network effect. All the users who use and trust Google, and that helps them sustain the technological advantages they have.
Yeah, I agree. How do you think this impacts YouTube? And I guess conversely, how does this impact, I guess, Google's future?
Yeah, the YouTube thing's hard. I don't know what they're going to do with the different businesses. You mentioned Chrome, that they have Google Maps, they have YouTube, they have lots of different portfolio
GCP,
businesses.
Google Cloud.
Google Cloud, yeah. So there's whispers about a breakup, and that could happen.
I've heard that too.
I don't have any special insight into whether that's going to be a reality or not. I just know from the history of previous spinoffs is that not every spinoff's a bad thing. Oftentimes it can be a good thing, actually. You know, investors probably don't want to spin off because uncertainty leads the stock price lower. So you cheer if there's no spinoff because the stock price will probably go up. But at the same token, if there's a spinoff, it's not the end of the world, because as long as you think Google is strong on its own, and if you think YouTube is strong on its own, and those don't need to be paired to have their strengths, then you're fine with a spinoff as an investor, because now you own two great businesses instead of one, or three great businesses instead of one. So it's possible that, you know, that each of them strengthen each other being under the Alphabet umbrella. I just happen to think that these are strong services on their own. And as a YouTube power user, I'm not going to Google. I'm not going to YouTube because I started on Google. I'm going to YouTube because I use YouTube. I think that's the case for a lot of people, especially because of the way that that's an app in a lot of smart TVs. And, you know, it's just its own app. So it is part of a lot of platforms and not dependent on Google traffic per se.
Right. Was this maybe a very quick answer? Was YouTube part of the... I know there's been some speculation, of course, on Twitter or X about this and a potential breakup. And there's some people that have been super excited about YouTube being a standalone company and others not so much. And some of it stems from Google hasn't really, or Alphabet hasn't really been super forthcoming on the finances of each segment per se. So, you know, peer into your crystal ball. How do you think this is all going to play out in the next few years?
Oh, man.
Nobody's going to hold your feet to the fire. This is just a prediction.
I will give you a prediction I'm pretty confident in. In the next 3 to 4 years, I'm going to continue to hold the stock, and I'm going to continue to have dividends that I've reinvested into the company.
Okay. That's a pretty good, that's a very safe prediction, if we will.
Yeah. What about you? Do you want to throw your hat in there?
I think it's going to be a lot of a nothing burger. I think, you know, I predict, if I peer into my crystal ball, which I'm probably 98% going to be wrong, but my two thoughts are, number one, in the long run, they'll end up paying a fine and moving on. B, if they do try to force them to split off some of the company, like if they try to split off Google, or if they try to split off YouTube or something of that nature, I think I can see that being tied up in the courts for at least 5 or 10 years. That's not something that somebody just goes boom and you do it tomorrow. You know, like the coder in the basement you were talking about, you know, he just writes a separate code. It's not quite that simple. So I could see that kind of thing being tied up for quite some time. So, and this is probably an unpopular opinion, but I feel like this is kind of an unfair judgment against the company. They're being punished for being good. Have they done some probably unsavory things, or maybe some maybe not so great things from a business standpoint to have some of that monopoly? Sure. But I think in large part, it's really due to them just being better. And I just feel like that's not really fair to be punished for being good at what you do. It's, are they going to take Tom Brady's Super Bowls away from him because he was that much better than the rest of the quarterbacks? So I don't know. I just feel it's a little bit like, why are they going after them, but maybe not Apple or Microsoft or, NVIDIA or whoever? I guess I feel like it's a little unfounded, but that's my personal opinion.
Nice.
Not investing advice.
Nice.
Not at all. Are there any other thoughts you had about Google before we sign off, or Alphabet?
Yeah, I think the AI thing is also a pretty big risk. Obviously, we have ChatGPT, and I don't know how common that is in regular world, but at least in some of the circles I run in, me and my brothers like to talk about it too. So ChatGPT seems to be a pretty real deal, and people are starting to adopt it. And so a risk potentially is that people use something like ChatGPT or some other AI to do their searching instead of Google.
Mm-hmm.
And so my conclusion with it was, while that certainly may happen, a vast majority of their revenue comes from less informational queries and more, when you have an intent to buy something.
Right.
And so I just wonder if the AI scare is just a little bit overblown.
Mm-hmm.
Like, yeah, maybe people just don't use AI at all. That's certainly a possibility. But maybe people do use the AI, but they also still use Google.
Mm-hmm.
That's also a possibility. And at the price that the stock's trading at, it's worth taking that risk, because there's lots of outcomes where that can pay off really well for shareholders.
Yep.
And that's kind of what I try to do with every stock I'm looking at. You never know, your crystal ball, my crystal ball are pretty scuffed up and dirty and blurry, but you just take all the possible outcomes into account, and you try to realistically say, if I pay this price for the stock and the outcome's this or this, am I still going to do okay? And you do that enough with a diversified portfolio, and that's how you build a resilient portfolio.
Mm-hmm. Yeah, exactly. That's exactly what you've been doing.
Yeah, I've been trying.
Yeah. So if this all sounds appealing, where can people go to learn more about what you're doing at Value Spotlight?
Yeah, valuespotlight.com. We have a team, actually, we've put together. You're part of the team. That's been a lot of fun. And so the team's been working really hard to provide additional resources, like you said, learning resources to break down the different parts of the write-up. Maybe the net debt to EBITDA, you're like, what the heck is this even talking about? Bonus resources to help you learn the different jargon that's in the write-ups. And obviously have the write-ups themselves and why I think a value opportunity is a value opportunity. We've also started doing these valuation hackathons, which is a chance to meet up with us and dive deep into whatever the topic is. We did a DCF on O'Reilly one of the weeks. We talked about solar panels and First Solar for, I don't know, an hour maybe.
Yeah.
That was the last one. That was fun. That's also included in Value Spotlight. And yeah, you get monthly stock recommendations, which is money I'm also investing myself. That's my life savings I'm putting out there. And you can follow along by having a subscription.
Yep, exactly. Yeah, and Andrew and the team put in a lot of hard work to put a new shine on Value Spotlight. So it's definitely worth checking out. And I, of course, will put that in the show notes so you guys can link to it quite easily. So with that, we'll go ahead and sign us off. You guys go out there, invest with a margin of safety, emphasis on the safety. Have a great week, and we'll talk to you all next week.